Good afternoon, ladies and gentlemen. In our ongoing series of Market Masters, where you get to meet the finest brains on Dalal Street, and especially in these volatile, difficult and painful times when portfolios are going for a toss, indices are at multi-month lows, and of course commodities are shooting through the roof. This is as good a time as any to listen to a very calm, collected and an experienced voice in the market. It gives me immense pleasure to welcome Mr. Nischal Maheshwari, a very, very well-known market expert who's seen it all over the last 30-35 years as far as Dalal Street is concerned. And off the record, he was telling me, ye sab to humne dekha hi hua hai. Now let us understand how to navigate this crisis. Namaste Nischal ji. As always, it's an immense pleasure on our side to welcome you. Paint for us a picture of what you think is happening on Dalal Street, and how should this crisis, which may probably extend a bit further, needs to be navigated.
Afternoon, Shailendri. Welcome to yourself and your viewers. So yeah, I know basically it's a painful period, and actually it's been a painful period for last 12 to 18 months. But then what we have to also put into perspective is that basically we came off from a very, very strong performance of the Indian markets for almost three and a half years from the time of COVID. And from the bottom of the COVID, basically, market was almost up more than 120% in the time frame of three and a half years. And most of these stocks have gone up 3-4 times. So I'm saying you have to give some breather to the market, and I think that is what the market is doing. It's consolidating. Now, these events are just a reason for consolidation of this market. I don't see that there is any, I still not come across a very strong reason to say that something is broken in the market and the market will go back to 15,000 and 17,000, 18,000 kind of a Nifty number. So I do not see any of those reasons happening. Yes, these are all painful reasons which are happening, but I think we have seen this many times. From 1997 Gulf War, we have seen it several times happening, and it does create a lot of anxiety in the short term. But if you really look at it, basically most of the time when oil has gone up to $120, $130, from the time it reverses, basically it goes back below its starting price when the war of this kind of a situation reverses. And why, I'll tell you the basic reason out there, because you have to understand that the growth in the oil demand world over is only 2-3% a year. And the oil production is going up almost around 4 to 5% a year, and slowly that is getting replaced by the solar energy and all. So that's why you see that there is, just before this war, there was a huge glut of oil basically across the world, and it still continues to be there. There is nothing, no reason which it has changed. So that's why I believe basically once this thing settles down, oil prices will go back to be maybe around 70, 80 kind of a number, and we should be once again okay basically. And I think the bigger issue remains to be the AI disruption. That's a very big thing basically, where still the market, and personally I also have not been able to put my arms around it, what kind of impact it will happen on the world economy, Indian economy. I think I'm more worried about that than this war and the volatile oil prices.
Okay, so you feel AI is a bigger pain than this issue that we are facing in the Middle East. So one point, Nischal, you've answered, you expect oil to come back to the 70 to 80 range because production exceeds demand. Fair point. Now, because we have to deploy fresh money or monthly salary, as in the case of many investors, at this point of time, how do you see the earnings cycle? I mean, anxiety, sentiment and everything have given us a 10% downtick on major indices, whether it's NSE 500 or Nifty 50 in the immediate term. But how do you see the earnings cycle from now on? What will make these markets rise?
So earnings, I think basically still continues. I still believe basically there will be 11-12% kind of an earnings growth for FY27, and I do not see any reason to bring down that number at the moment, because I believe basically this high oil prices are here for maybe at most a month, and thereafter it should come back. So I don't think so that's going to impact the economy much. And the earnings growth around 10 to 11% is going to happen for FY27. So no change in view out there.
Okay. Now, based on this earnings growth and the fact that the markets have corrected fairly decently in many mid caps and small caps, where should fresh money go in, sir?
So, given that there is a huge amount of uncertainty the world over because of various reasons, war, tariffs, AI, I think one should be more focused on to more the domestic side of the economy. Domestic demand still continues to remain good. We are growing at around 7% this year, and all the projections which have been made at around 7.5%, and I'm talking about real rate, and obviously nominal should be something like a 10% kind of a growth for the economy. If that kind of number is there, I think focus on there. Some of the international markets which still remain buoyant for certain industries like pharma, I think that could be a good one to look at. But I think beyond that, one shouldn't be focused on to the global markets. Domestically, I think banking, internationally pharma, domestically again auto, consumption in various forms basically. I think that's where one should be focused on.
Okay. Let's talk about banking, Nischalji. In the last in the last 3 or 4 quarters, we have seen a slow but steady accretion that has happened on the PSU banking side in terms of higher credit growth versus private sector banks, as also cleaner balance sheets that have been a result of last 10 years work by the government, by the sector in itself. Within banking, how are you allocating fresh capital? Does it go towards smaller banks? Does it go towards larger private sector banks?
So a combination of the two. I have come out wrong basically because I have always invested into the private sector banks. But what has happened in the last 1.5 years is basically PSU banks have cleaned up their balance sheet. They are now equal and aggressive players in the consumer market. So on the retail side also they are pretty strongly out there. They have strong balance sheets and very good credit policies. So PSU banks are done pretty well, and their valuations were obviously much cheaper than the private sector. So in the last 1 year, PSUs have done really well. I continue to believe basically your allocation should be something like a 50-50 basically between PSUs and private sector. Given that PSUs still continue to do well and are still cheap, still remain to be reasonably valued. And the private sector, for the reason that they have not performed the last 2 years, so some amount of performance should come back to them.
Okay. You've been a very big believer of trying to also time the market in terms of buying margin of safety in price, as also buying fear. In the last 10 days or 15 days or 20 days, what have been your own forays into the market? Have you booked profit? Have you added to existing positions, or have you made new ones?
So in this kind of markets where it falls basically, I think there are two things which historically I have done is one, basically don't get panicked, because we have seen several cycles of them, and these are not long lasting, because there is no structural change basically which happens because of these wars and all. The structural change which I was talking about earlier is because of the AI. Now that's a very big structural change, and you need to go back and have a relook at your portfolio. But these kind of wars and all basically gives you opportunity to add to your existing positions. I would recommend that basically unless you have been tracking something for a long period of time and waiting for a particular price, then fine, then add a new one. But I think most of the time you should be adding to your existing portfolio.
Fair point. if somebody were to step in the market now, where would you suggest fresh capital should go in? One presumes that equity is the way forward. Majority, let's presume 60 to 70% of fresh portfolio will be in equity. What should one be buying?
I told you those 3-4 sectors basically looks interesting to me, and there is another sector basically which for some time I've been cautious about, but I think now could be an interesting entry point is defense. Because yes, valuations have been high, but what I see here is basically most of the Indian companies are going to see a strong order book, not only from the Indian government but also from the international government also, international countries also. So I think one should look at some of the defense companies also at the moment.
Okay. So banking, pharmaceuticals, defense, and the consumption theme plus auto is what you suggest be the catchment area of fresh investments. Nishalji, at this point of time, what is the view that you hold on precious metals? We've seen a very sharp erosion in both gold and silver. Are good times likely to come back?
So, in these kind of uncertain times, basically we always seen that gold is a safe haven kind of a metal basically, and that's why you see good demand. But given that the prices are so elevated, I don't see a much safe haven there also. So, I would believe basically if gold corrects, one should keep on adding gold. And I think 5,000 is a good level basically to keep on adding gold. But silver, I would presume basically that there is too much volatility out there. I think one should avoid silver.
Okay. There is also this view in the market, and I ask this because you have seen 7 or 8 bear and bull cycles. There is this talk of a huge commodity cycle running in the markets. We've seen precious metals as well as industrial metals rise very sharply. We've seen now energy spiking with crude, natural gas, so on and so forth. There is a view in the market that the next cycle on the long side is on agri commodities. Maybe sugar, maybe maize. How do you see this?
So I am not a very expert on the sugar side, on the agri commodity side. Basically, I do not track them much, so difficult to say. But I think sugar and all, historically when I followed them, we have to clearly see what kind of cycle happens basically as far as the production of the sugarcane is concerned. And there are 2 large markets, India and Brazil. And alternatively, we see basically that if there is a good monsoon, you have surplus, and then the next year just goes down. So I have not tracked them. Okay. So difficult to say. Okay.
Coming back to the sectors that you've pointed out, banking, both private and public, autos, pharma, and of course defense. What are the 3 major things that you would be looking out in these 4 sectors, either to add to existing positions or create fresh ones?
So I think one is across the sector we have to keep on very closely monitoring our economic demand basically, so growth in economy. Is there anything basically which this oil, if it continues to remain at a higher elevated price for a longer period of time, it might dent the 7%, 6.5%, 7% growth which the RBI is projecting. That might create an issue for all across the sector, especially the consumption and all. Oil prices, if it remains high, government passes it, obviously it is going to create a problem as far as the consumption sector is concerned. So one should be definitely be very cautious about this. The second thing I would look out is basically in case of the banking sector, is this issue creating any issues on the credit side? I think these are the 1 or 2 things basically I would look at it. So I'm saying basically focus more on the macros at the moment and see basically how all this is impacting the economy.
In terms of pharma, what are within pharma, it's such a wide sector. Are there any niches that you are focusing on in terms of stock picking?
So I've focused and invested into particular parts of pharma. One is the CDMO part, which was basically a long theory that as international companies move away from China, they would do a China plus one kind of a thing. And I've seen a lot of these companies who had invested in large capacities upfront started reaping the fruits of it. So I think CDMO is one space which continues to remain very positive, and a lot of companies are seeing record inquiries coming in that. And the second is the hospital sector in the country. I think that's a very domestic focused one, and that continues to do pretty well. So I think these are the two parts of pharma which one can look at it, and there's got long runway to grow.
Okay, hospital, it seems, is a very popular trade across the board, and they've created immense wealth over the last 5 years. Is it overdone?
I don't think so. Basically, if you really look at it, the penetration level, the bed per thousand, I think it's too much, too little in India. I think it's another 20-25 years before all these things get overdone. Basically, I'm saying we are such a large population. It's very difficult to get it overdone. Yes, maybe valuation for the moment may be overdone, but growth in the sector, I don't think so should taper off.
Nishalji, because everybody in his or her life is fixated on this daily gyration of the Nifty, where do you think will true value emerge on Indian equity markets? For instance, as you say, we've seen this pain many times, the broader structure of the market as also the economy looks good. But, there has to be a catalyzing event where buying starts. What do you think that event can be, and what level would you be, say कि भाई जो एक्स्ट्रा इतने सारे घर खरीद रखे हैं वो 2-3 बेच दो या एक बेच दो और वो पैसा इक्विटी में लगा लो? Where is the tipping point?
So I would see, given that I am a fundamental analyst, basically I only believe in numbers. And what I would put it is basically saying that historically India has largely bottomed out. If you look at it, several wars basically in the last 25 years, I think 17-18 times India has bottomed out historically. And 17-18 times basically a 1400 kind of a number for FY27. I think that's the earning for Nifty, and that should give you a fair idea saying that where the Nifty should bottom out. I'm just trying to figure out basically how much that Nifty means. But 17 times into 1400.
Yes, that's what I'm doing.
Around 23,800. So you are very close to the bottom. I think one should start looking at saying that if they want to really start investing and maybe Bacon said that market goes down another 5% from 23,800. That's a fair way basically to start investing into the market. Start from 23,800 and up to 5% down, you should be fully invested.
I mean, this is such a wonderful, thumb rule that you've given, and let's work on this. And how about, sir, a view on this constant degradation of the globe that we see? In 80s, 90s, the world was a better place to live. Suddenly, we've seen this crisis emerging, and at the same time, the Indian infrastructure rally, as also the markets and the economy, have been on a gradual upturn. How would you characterize this overall situation in favor or against India for investors?
So I tell you basically, which I was telling you earlier, basically is the issue about the AI. I think that is one big thing which is change in the market, and suddenly we find ourselves out of favor across the world. Mm-hmm. Now, though we were big in the IT services, but we were never big on IT research and IT products. And I think there the issues have come to create a problem for us. So, given that in that kind of a situation, now we find ourselves that we are behind the curve as far as AI is concerned, and that trade has bypassed us. So, if you look at it, in the last 1 year, all AI related countries, whether it is Korea, Japan, Taiwan, they are up 100%. India has been actually down. So, I think
Ji.
that's a big miss on the part of India as far as emerging markets are concerned, and that's why we see that the FIs are still aggressively selling. Because they don't find a very good reason to buy India. Now, neither India is very cheap, and neither India has got the hot sector. So I think we have to, but the government is very much aware of this thing. In the last 1.5 years, we've seen immense amount of work which the government has done. We had the largest summit in Delhi just a couple of weeks back. So I think India is catching up, but then it will take time.
Okay. How would you look towards the market at Diwali or, end of calendar 2026? Will we be in a better place?
Definitely we'll be higher from here.
How high?
That's a very difficult one, but I would tell you basically it'll be higher from here.
Fair point. Let's stick to higher, and it'll be a better place. My final question, Nischalji, is on this thing that you have actually highlighted several times in our conversation, the absence of an AI trade and the impact of that on domestic IT. Both of us have tracked the IT sector for about 25 years, and it has been an immense creator of wealth, of economic prosperity, and also, how should I say, social upliftment. How do you see IT as of now? Is this something which is a part of your portfolio?
So at the moment, I don't own any IT in my portfolio. I'm also grappling with it, saying that whether is it cheap enough, or whether now the issue remains to be whether I think the cheapness is not the issue. The issue is basically which of these companies are going to able to pivot to AI model, and what kind of in next 3 or 5 years, what kind of company any of these would be. So that's the, I think, major hassle basically which we see as far as IT is concerned. Because one thing is very clear is that the IT industry is changed, and it's changed for definitely for a much different way. So all these companies need to find alternative methods to go there. I'm not saying that any of these companies is going to close down or anything like that, but they have to find a way out of this to get back into saying, so they have to spend more on R&D, and they have to find basically that how they are able to, what they have been doing historically in Y2K, digital times, SaaS times, all those times, basically how they become the effective service providers to the end users and the product guys. I think that is what India has been playing in the last 25 years. They have to find a way there.
Fair point. When you gaze at the crystal ball, both of us will remember that Wipro and HCL Tech actually were hardware players in the 1990s, and then they got into software services. Let's not take names at the moment, but do you see some of these IT services giants moving towards the hardware space on the semiconductor side? I believe Wipro just made an announcement that they're setting up something on the semiconductor space. They are cash rich, they are debt free, they have the expertise, and that's the growth area. Do you see that happening?
Very difficult basically for me to presume saying that a software company goes into hardware, because what you have to see is basically, one, it is a very, very hugely capital intensive. So that is one thing. Secondly, the margins, ROIs are totally different. I think none of these companies have even pivoted towards going into a data center, which TCS has done now, which is very close to their what would have, and the reason being is always, I think they were under pressure from whatever, maybe the market, maybe the investors, and all of them, not to bring down the margins, not to bring down the ROIs. And I think that's where the mindset has to change, to start looking for long-term investments and be okay saying that, yes, we are okay basically having low ROIs. And I think the one thing which the Indian market has also to graduate, saying that we are okay with these companies spending $1 billion a year basically on R&D. It is not that the other Indian companies don't spend it. You look at pharma companies, they are all spending close to $1 billion basically, the big ones, the Sun Pharma, the Dr. Reddy's and all. I think 5,000-6,000 crores they are spending on R&D. So it's not that they are not doing it. I mean, some of these companies have to start pivoting towards there and say, okay, we are going to do it. I've heard, I'm no expert on AI, but I've heard a lot of these guys who were here at the recent AI summit, and they said that it is not bypassed India as yet, and India can catch up. So I'm just hoping that some of these companies are going to be the leaders again, basically, in times to come.
निश्चल जी, अगर कलेक्टिवली जो नैस्कॉम के मेंबर्स हैं उन्होंने $1 बिलियन एक साल में भी लगा दिया होता R&D में, तो हम लोग ये चर्चा ना कर रहे होते. बहरहाल, एज दे ऑलवेज से दैट मार्केट्स आर एन इंटरेस्टिंग प्लेस टू बी, एंड times such as these will also go away. What a wonderful conversation, and thank you for such excellent insights into the market, especially 17-18% PE where the markets have bottomed, and of course the EPS, if you multiply that, you will get at least the base value of the Nifty where the market should rebound from. Thank you very much, and here's wishing you all the best in all the wonderful stock picking that you've done. Thank you.
Thanks, Shailendra.
That, ladies and gentlemen, was Mr. Nischal Maheshwari, a very well-known and seasoned stock picker on Dalal Street. His view is that possibly the bottom on the Nifty is in place. 23,800 is where you should be at least starting to look to buying fresh equity, and 5% below 23,800 is the time to be fully invested into the market. In terms of sectors, he prefers a mix of private sector and public sector banking, the auto space within the consumption theme, pharma, especially the CDMO space, as also the hospital space, and of course looking at the consumption theme led by the broader economic growth. He's avoiding IT completely. So that's the gist of the last 30-35 minutes. I hope you enjoyed the conversation as much as I did. Please continue with Business Today. Lots of exciting things happening in the markets. Good morning, ladies and gentlemen. The mood